For an update on Allianz's digital trading business, I'm joined here in the studio by Ktenidis. He is Director of Digital Trading and ALP at Allianz UK. Alex, when we spoke about 6 months ago, the summer of 2025, you had a lot of plans for what you were going to do with the business. What have you done since then? What has been the impact?
Thanks, Mark, for having me. It's been a really busy 6 months and I'm really happy to be back here with you. We had 3 key promises last time that we sat together. One was we were opening up to trade again. The second was we're investing really heavily in our products and our propositions. And the last one was we were anchored on a mission to be the easiest insurer to deal with. We have invested really heavily, putting the most quotes to market of any insurer on iMarket, 1.6 million in total in 2025, demonstrating that appetite and that willingness to trade. On top of that, we've seen our new business in the Q4 of 2025 up nearly 35% year on year across our digital estate and open market, which is really strong performance. And finally, we have been investing in taking friction out of the journey for brokers based on their feedback, and saw record levels of straight through processing in our business, which is a great barometer of that frictionless journey to trade. All of that has culminated in 2025 being the best result for digital in a decade, something that's been hard fought and that we are really, really proud of as a business.
And what would you say have been the most impactful changes that you've made for brokers recently?
So there are probably 3 buckets or 3 areas where we've invested most heavily. The first one is in pricing and product changes. So we've been driving between 10 and 12 really meaningful pricing and product changes every month across our 11 products in our range. One of the biggest highlights from 2025 would have been our mini fleet refresh that we delivered at the back end of the year. That opened up areas like NCD conversion for actress brokers via iMarket. It extended our appetite from 3 vehicles to 2 vehicles plus on the back of broker feedback. And again, we added more flexibility for younger drivers and older vehicles off the back of what our brokers were telling us is required for them to compete and to win. That has really contributed to those new business results at the back end of the year and into the start of 2026 that we are seeing, and something that we're really, really happy with. The second area we've been investing strongly in is service. And we've gone on a big empowerment program as part of the digital trading business over the last 12 months. We saw 80 authority increases across our underwriting population. And we've brought the benchmark up now from a base level to a position where 9 out of 10 of our people can answer the vast majority of queries that come through from our brokers on the phones or on live chat where they're seeking support. We've also managed, through the use of AI and other tooling, to cut down the time it takes to get our underwriters from some of our authority levels and to increase them to others by 2/3. And that's because we've implemented new AI tooling where they can search 300 documents at the push of a button, cutting search time down by again 2/3. And that's really helping us to empower underwriters so that when our brokers call, the person at the end of the phone is empowered to answer first time with the right quality and the right expertise. And it's playing through into satisfaction rates that we see on our live chats, for example, at 93% as being rated excellent or good, and a big step change in 2025 in terms of those ones being rated as excellent. So that is something that we've really focused on in the year. The final bucket is innovation or investing in new tooling. And last time I sat with you, we spoke about our smart broker brief that had just launched literally within weeks of us speaking. Now we've sent over 45,000 of those smart broker briefs to brokers, helping them to have much more informed, much more quality conversation with their clients. We flagged over 16,500 cases of underinsurance, which is a topic that we are really invested in, and we want to help move the needle on with the industry. And we've seen a spike of 10% in terms of those individuals, brokers and clients using our underinsurance hub, where there are assets to help on things like, do you have the right indemnity periods? How can you make sure your business is protected? So all in all, we've really focused across the piece on product and pricing improvements, on those service enhancements and those new tools that basically make us easier to trade with.
And what are brokers speaking to you about at the moment?
Yes, so one key topic of conversation is the soft market. It's driving a position where brokers and insurers are having to do more with less. If I look back into recent history, the last 2 cycles based on some market indices lasted somewhere in the region of 4 years. So a lot of conversation is focused around, ultimately, what does the soft market mean for our business, and how long will this soft market last relative to previous cycles? I think it's really positive actually for customers and for brokers, in the sense that it is driving a real battleground of innovation, of seeking of efficiency and of digitalization within the digital trading space, which ultimately I believe is driving better customer outcomes. We're investing really heavily off the back of those demands. And one area we've invested strongly in is digitalization. So how do we trade more risks through our digital trading business and our digital trading products? When we last spoke, we were just piloting through with our property owners product, triaging of manual submissions from our mid-market business using AI and a great tool we've invested in called Cytora into our digital trading business. We've now scaled that across the UK fully. We've triaged 1,500 cases from our mid-market business into our digital trading business. And we're finding we're quoting more, so we have broader appetite in digital, that we are turning these around much, much faster, and that we're increasing our average premiums by about 3 times for these risks and winning more of them in the process of doing so, because we can offer slicker, faster journeys, faster turnarounds and self-serve capability to our brokers. We are in the process of piloting that with motor. And that is proving the hypothesis and the case we've seen in property owners. It works and brokers really appreciate it. And we hope to scale that now in the next couple of months. And then we turn our attention to commercial combined, which there's no doubt, if you look at the quote rates in the market, is the most challenging to trade fully digitally. But we are ready to deliver a digitalization kind of pilot there, where we have expert underwriters ready to augment slicker systems and that automated triage that we spoke about to help our brokers trade more digitally in that space. So that is a really, really big focus for us as we look ahead.
Are you going to be able to maintain the same level of momentum for the rest of this year? And what can brokers expect next?
Mark, we certainly intend to. This is a market that has a need for speed, and we are literally all in when it comes to digital trading and progressing our proposition there. 3 areas of focus looking to the rest of 2026. More of the same when it comes to product improvements and enhancements, also with some new launches. To give you a sneak peek, we'll be launching a before the event legal expenses product digitally for the first time with self-serve capability in 2026. We're really excited about that. Also, further enhancements to our commercial combined proposition, which we want to really drive growth through in the year. Secondly, doubling down on digitalization. We will continue to scale the success that we've had there in property owners to other products like motor and commercial combined, all taking our brokers' feedback as we go and making sure it works for them. And finally, service. This is a hygiene factor for us, but we want to make sure we have our most experienced, best traders on the phones, on our live chats, dealing with our brokers. We've made some really good changes at the back end of 2025 there that mean we are seeing the best service we've seen in probably a year at the start of this year. We want to carry that through the rest of 26 and support our partners and ultimately continue to grow and keep up the momentum, as you say.
Alex Ktenidis, thank you.
Thanks, Mark.